Hey everyone, welcome to the KE Report Daily Editorial on this Friday, July 25th, chatting with Joel Elconin. Joel is the co-host of the Pre-Market Prep Show. Also check out the Stock Trader Network, which Joel recently founded and launched. As we always do with Joel, we're going to be talking markets, which continue to move higher, and really this almost everything bull market that we are seeing. Well, we're going to ask him too where he sees some of the leadership and even recap some recent earnings. So, Joel, big picture here, markets continue higher. S&P at an all-time high. I'm curious as to what you're seeing in terms of leadership within the markets. Break down where you see some of the best opportunities and what's leading these markets higher, please.
Good afternoon, gentlemen. Thanks for having me as usual on this Thursday afternoon. What got us here? What got us here, gentlemen? Tech, 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 tech. Microsoft up $7 today, making a blasting to a new all-time high. Nvidia making a new all-time high. Google having a big run into its report, not at an all-time high, but Meta having a good day, Broadcom having a good day, Berkshire having a good day, JPMorgan. It's a little bit of everything, right? A little bit of value, a little bit of growth, and a little bit of, well, and a lot of bit of tech. So tech is what took you to the dance. So you better not split up yet.
Yeah, Joel, you said it. I mean, the tech is still dancing to higher levels and all-time highs in so many of these stocks and 52-week highs in a lot of them and all-time highs in the markets. Is there anything on the radar that's going to slow this train down? Because it seems like even in the earnings season that we've seen, people have kind of shrugged off even reports that weren't that great, and it seems like it's just a melt-up market.
I mean, there are some stocks getting hit today. IBM, not a bad report, but they said, hey, a little bit of a cautious outlook. Texas Instruments got hit. People are not buying $14 burritos as much. Pulte Mexican Grill. So maybe, I mean, we keep calling for that, the consumer slowdown. Well, maybe you're seeing it a little bit in the likes of like Chipotle. IBM just had a tremendous run that got ahead of itself. What the trend that I'm seeing, with the earnings is that the ones that miss, they're not really being bought right back up. A good example, Texas Instruments that had on not bad reports. If you guys are trading the headline numbers, you just got to be careful because there is a lot of like beat, lower guidance. Texas Instrument trying to find support at yesterday's low. I mentioned IBM. A lot of divergence in the airline, a lot of turbulence, let me say that, in the airline stocks. You had Delta Airlines just blow it away, big gap up, just struggling to hold that gap. United Airlines, that had a pretty good report, that gapped up, trying to hold on. And then you had, Southwest Air. They took the opportunity. They pre-announced they're down $4.50, down 12%. That's a big move. And American Airlines. So I think if anything, the tone with the earnings season is, yeah, well, you get the higher opens and, in some of these big stocks, well, maybe you see a little bit of profit taking, maybe debt based on some of the optionality. But if you miss or disappoint or say something on the conference call, nah, they're not going to give you much mercy.
Joel, what about the guidance that we're hearing? Again, a lot of people focused on tariffs and if or how those will even filter through. And you are right. It does seem like everyone over the last year now guides lower but beats estimates. So anything that's caught your eye in terms of the early on guidance we're getting at these earnings calls?
Well, it's kind of interesting because I was thinking about this earnings season and, coming into it, I think that you had tempered expectations because of the tariffs. And yeah, some tariffs have hit, some haven't. I think that there was a lot of pre-ordering, companies getting ahead of the tariffs, bringing that stuff in, getting it on the shelves and sending it out. So, and then they were also a little bit cautious on guidance. So I think you're clearing a lower bar with this, and then you clear the low bar, but you're not, all rosy for the guidance. I mean, this is a tough. The tariffs are still, coming down, the long-term effects, but I mean, just like, the effects of COVID and the effects on the supply chain, right? Was that immediate? Did we immediately see, supply and demand disrupted? Look how long that took. Now, I'm not saying the tariffs are going to be have as much of a monumental impact. I don't know if anything can have as big impact as COVID, but you can wait for the shoe to drop. You can wait for the bad news to come, but the beats and then the lower guidance right now, not something you want to see. But then once again, they're setting a lower bar for the next quarter.
Joel, I'm just curious your take on retail investors' involvement in the sector now, because it seems like when we look at the financial sector, a lot of the banks are making money because of increased trading commissions. You're seeing things like Coinbase in the crypto space going up to new highs. You've seen a nice bounce in Reddit where you have a lot of the retail hordes in there. And it just seems like we've seen the return of the meme stocks recently with Krispy Kreme and Kohl's and like different American Eagle Outfitters, all these companies that were struggling a little bit, getting a blast from the gamma squeezers on the options. Is retail changing the dynamics of these markets because of their greater participation?
A couple points here. My first point is institutions, they like to participate in this too. I don't think they're necessarily selling their long-term Nvidia holdings to invest in these stocks, but there's institutional participation too, and they can really participate. They can see the retail, anticipate the retail, get ahead of the retail, flip on the retail. But what I'll just say is a characteristic of this meme stock run is much different than some of the prior ones. And not sure exactly what the circumstances are leading at it, but what kicked things off was Open Door. Open Door is an online residential housing site. Eric Jackson, I'm not even sure what firm he's at. He comes out and it's a $2.50 stock. And he says it's going to 85. And he appeals to all the people on Reddit, all the people on the threads, and the stock got up to nearly $5 from around 50 cents. And what's also interesting is when a stock gets up and around $5, it becomes marginable. But that turned out to be a wall. It's pulled back. What I've seen in some of these other short squeezes, besides Open Door, Rocket, AEO is the flavor of today, is that you're seeing the best prices to exit in the pre-market in the after hours. So if you're trading these things, you may not always get the best prices in the regular session. You may get the bad. I would encourage you to take a look at the pre-market as opposed to these, like the runs that you had in GME and the extensions. So they're very short-lived and they're being snuffed out. So a word to the wise is sufficient. You want to sell those things on the way up. And I know it might look bad when it goes up a couple bucks higher, but you'll have absolutely no shot getting that price on the way down. And also you leave yourself subject to trading halts, which is never a fun thing to be in.
Yeah, interesting strategy there, Joel. An interesting little point that you noted. One other thing that just shows how active the retail audience is. The bank earnings are telling us this, and also looking at Robinhood stock. Oh man, that thing's just been taken off. But Joel, this also begs the question, what about small caps? Because hey, look, retail does like getting into small caps. They like cheaper stocks, whether they're good or not. What are you seeing in the small cap market?
I mean, the small caps are trying. There's a lot less liquidity in the stocks. I mean, there's just less liquidity, and when there's less liquidity, it attracts less retail participation. WM's trying. It's still having a good month. It's struggling at last month's high. The biotech sector is a big drag on that, and you need, I mean, in earnest to get the IWMs really moving as you need lower interest rates. And right now, with the data that we're seeing, that's not exactly on the horizon. So, they're doing okay. And I wait for an interest rate cut to get really excited about the IWM.
Joel, are you surprised at all that we're seeing not just strength in the general markets, but more participation? There's still a lot of stuff herded into the big tech and the mega cap tech names, as you mentioned, but we're seeing a lot of sectors doing well. We're seeing the cryptos doing well. Bitcoin was just up at an all-time high recently. Ethereum's taken back off again. We covered the commodity space on the show, and man, a ton of metals are surging up to multi-year highs or sometimes decade highs, and a lot of the stocks are going up multiple fold. It seems like everywhere you look except the U.S. dollar, things are just melting up. Are you surprised at where we're at mid-year here compared to the way people felt just a couple months ago?
I mentioned that I used the word Goldilocks scenario a couple weeks ago, and actually I saw that filtering through the media as well. I mean, you have a president that's behind the crypto. You have a president that, takes a lot of pride in the stock market. I am surprised. I'm very surprised. I mean, the first year of a presidential election cycle is not a bad year in the market. The second year is a little bit more treacherous, but the fact that, inflation, and I'm not saying I believe all the measures and all the statistics, it seems to be a little bit subdued while we are not, really killing the economy. So you're getting decent statistics, decent numbers, decent growth. I mean, yeah. I mean, it's not over until the fat lady sings, and I don't even think she's in her car yet.
So I just find it interesting where really one of the only areas that I see declining is the US dollar. At worst, some of these other stocks or other sectors are simply going sideways, including bonds, which begs the question. I've asked a few people this. Where's this money coming from? How is there so much extra money that was simply, it seems like, on the sidelines and now it's hitting everything? Is that simply the story? There's that just this much money on the sidelines?
I think so. I think when you have a correction like you did in April, and just a snapback rally, a lot of people sold on the way down and then did not have a chance to, redeploy. That was a pretty quick snapback rally. So, there's money on the sidelines that exited the market. And, when you're a money manager, you got to get that, if you miss the turn, you got to figure out a way to deploy it into the market. So, the dips have been shallow, off tweets or Truth Social. I just think it's, the money managers are underinvested and they just feel that every, every pullback is a buy the dip opportunity so they can get up there and participate with the benchmarks.
Well, Joel, next week we close up the month of July. Any positioning you expect at month end? Any news you're looking forward to? Any guidance from earnings you're looking forward to? Anything in the week ahead that you're looking forward to?
I mean, the earnings is continue. I believe you have Apple next week. So that, that's always an interesting report. You still have Amazon yet to report. So you still Microsoft as well. So you're going to get some of the big tech earnings coming in and being such a big factor of the S&P. Not a lot, but much as far as economic data. I mean, you're going to get your inflation numbers mid-month. So that will not be another key barometer. But, summer markets here, you could say what you want to say about the month of July, but so far, so good. The party continues on Wall Street.
Yes, it does. And hey, it's spreading out just outside of simply the broad averages, too, in the big tech stocks, as we noted. A lot of resources, commodities doing well, crypto doing well. There's just a lot of opportunity in these markets. Who knows how long this party's going to continue, but hopefully everybody right now at least is invested and taking advantage of a lot of these strong upward trends. Again, Joel Elconin, co-host of the Pre-Market Prep Show. Click the link in the show notes to follow along with Joel's show. Joel, thank you as always for your time this week.
Okay, thank you, gentlemen.